Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. My guest on today's show is Hal Liebes. Hal is the COO of Alger, an investment firm known for its bottom-up fundamental research process that was founded in 1964. Hal joined Alger in 2005 as they were rebuilding the firm after losing 35 of its 55 employees on 9/11. Hal shares how curiosity and knowing how you work is crucial for finding the right type of role for career happiness. We talk about the role of the COO and the myriad of issues he faces on a daily basis, how to build consensus, selecting new service providers, and best practices on the common challenges with merging and managing people-based businesses. We then turn to how Alger has evolved over time with a number of strategic efforts across products, acquisitions, and a global eye towards distribution. Please enjoy my conversation with Hal Liebes. Hal, thanks for joining me. I'm excited to hear all about your career path and tell us how you started.
Sure. Coming out of law school, I joined a big national law firm called Morgan, Lewis & Bockius. I was assigned to the real estate group. That was not the best fit for the real estate group at Morgan, Lewis & Bockius or for me, but I did get to meet a litigation partner who introduced me to the idea of going to work at the SEC. I joined the SEC in 1991. Looking back over the course of my career, that was probably the most exciting time for me. I really came alive as a young lawyer. My colleagues, who are still professional colleagues and friends, were great. We were all about the same age in the group that I worked in. We were all at about the same places in our lives. And I really fell in love with the securities law. I very much enjoyed being an enforcement lawyer and had a wonderful experience. The next wonderful experience, which led to a career move, was the birth of our son. And I realized that while the government was a wonderful place to work, I had obligations to other people, and government salaries back in the early 90s were substantially below what private market salaries were. Sadly or otherwise, I needed to make a move. A former colleague of mine from the SEC had joined Credit Suisse First Boston at the time. She called me and said that there was an opportunity to join CSFB, which I did in March of 1994. And I was asked to take a look at the investment management unit, then known as CS First Boston Investment Management. And I like to joke with my old colleagues that I still haven't delivered my final report on what I've learned about investment management. But longer story short, I was asked to become the full-time chief compliance officer to CS First Boston Investment Management in 1994. The woman who had joined as the general counsel went on maternity leave like a month after she started, leaving basically me alone. You talk about things in your life where you realize you have an aptitude and you enjoy it. I just really enjoyed the work. That unit had a problem, so my enforcement background and my investigative skills that I had picked up at the SEC were very helpful at the time. I really got to learn about business. I got to learn about the legal structure of the investment advisory space, of the mutual fund space, and say as a headline, when you work in a regulated industry like we do, the opportunity to influence business increases dramatically in my view. And I just had that opportunity in my early days at CSFB, which made me very happy. That led to a 10-year career at CSF. That unit merged into a firm called BEA Associates in 1995, which renamed itself Credit Suisse Asset Management New York when CSAM was formed in 1997. I, at the time, became, I think my title was General Counsel to the Americas. We had taken 14 or 15 units around the world, and somebody wisely realized that aggregating those business units together improved the stock price of Credit Suisse, and it made good business sense that people who were managing other people's money would aggregate together into a global business rather than have them as unimportant offshoots in various offices of a big global investment bank around the world. So that was a great 10 years. I kept enjoying my time there and kept having success there. And I ended up as the global general counsel of CSAM. And I did that for 2004, 2005. I left CSAM because I really think at the end of all of it, they never really understood whether they wanted to be a global firm functionally aligned or a regional firm sharing the attributes of their other regional affiliates. And I spent only a year, then it was called Amvest Cap. It was the holding company that owned Invesco. I was there for a year. I like to dabble. I like to get down into the weeds with people. And I think that role was much more global overseer.
Going back a little bit to your time in enforcement and going into an organization, does that enforcement mentality change? Do you come in a little harder from the enforcement side?
When I was at the SEC, I came in real hard on the enforcement side. In fact, I was part of the group of lawyers that worked on the Stratton Oakmont case, which people know is the Wolf of Wall Street movie. And I think that the mindset change for me was I was actually not trying to find fault with anyone when I joined Credit Suisse. I was trying to help them be in a place where nobody would find fault with them. And so one of the weird psychological tricks I played when I was an enforcement lawyer is I manufactured that the people that I were investigating were bad people. And so you have to just switch your mindset and you have to manufacture that everybody you're working with when you're on the private side is a good person. How can I help this good person achieve their objective, right? How can I facilitate them doing their job in what can be a very complex operating and regulatory environment? Knowing regulation has given me an advantage in my business dealings, becoming an operating officer. That's helped a lot. The real benefit for being on the enforcement side was being able to look at situations and put facts together and being able to tell a story, either in one case, this is what they did wrong, or in another case to say to someone, here's how to achieve your objective without touching any of those third rails out there.
Inserting the Wolf of Wall Street case, I have to ask you about that.
Sure. I remember very clearly understanding how inexperienced I was and my colleagues were. And the Stratton Oakmont team hired the best white-collar defense lawyers. And I use the expression like we looked like little kids in our parents' suits walking into court. But it was fantastic. It was really intense amount of work for, I think I was probably 28 or 29 years old at the time. My quote-unquote manager on that team was 5 months older than me. And I look back and think, oh my gosh, we don't know what the heck we're doing. And we're learning as we're going. So it was a great deal of, I use the term fun. It was a great case. My personal memory is I was working on the pretrial order, and it was the Tuesday before Thanksgiving in 1993. I was working like 15, 16, 17 hours a day, 7 days a week, as were all my colleagues. And my wife came home and said, I'm going to make a turkey sandwich and then we're going to drive to the hospital because we're going to have a baby tomorrow. And so right in the middle of all of this, my son was born, which was a very memorable time in all of our lives.
That's amazing. Thanks for sharing that. So back to this Invest Caps, you're doing things that you really want to get into the weeds on things. What's the moment when you realize that maybe this isn't the job cut for me?
One of the things that I've come to learn over the course of my career is that you should probably spend some time understanding what your own personality is and where you might best fit and what kind of place you might thrive. And so I'm very much a doer kind of person. And I found myself sitting in meetings watching other people doing the work that I would have enjoyed doing. And so as much as I realize now after 20 years at Alger, you do have to step back a little bit and then use your knowledge and your experience in a different way. I can just remember various meetings where I thought I could walk out of this room and it'll get done with or without me. And so I started basically saying I need to be in a place where I can be more directly impactful. And that read, find a smaller firm. The second thing I would say is over the course of my time, even before now, I really started to understand that being in the role that I was in an investment business, meant that I wasn't the primary part of the business, right? My job was to facilitate other people managing money and helping them have more time to do that in a way that was going to produce better investment results. I kept looking for firms. In my own mind, I thought if I'm going to help these people, I need to be closer to them. At the global head of compliance of UK holding company that owned 10, 12, 15 subsidiary entities, I was not that. I was something completely different. I really felt I want to talk to a PM. I want to talk to a salesperson. I want to understand what their challenges are each and every day and figure out how to build an organization that lets them do that more and not get themselves mucked up in things that they probably shouldn't be spending their time with. So it actually led me to the decision to say, go find a role where that would be something you could do. And along comes Alger. I met Dan Chong, our CEO, on a Friday. Dan offered me a job on Monday, and I took it Monday afternoon. So it was an immediate connection in my mind that what Alger represented at that time and still represents, which is in my mind, a premier investment firm, that the structure and the philosophy of that firm is investments come first, but we need people to help us run our business, and we need people to take as much off our plates because managing money is really hard, and doing it successfully takes a lot of time and a lot of effort. It's been for me, a great relationship with Dan, who I've worked with for 19 years, but with all of the investment and the sales and marketing team, because I think the folks at Alger really look to my team as partners. Hey guys, make this easy for us. Hey guys, explain this to us. We don't understand. And over time, as you build up the confidence of your colleagues, you can just say things like, guys, I can bore you for 25 minutes with the intricacies of why you can't do that, or you can trust me that not doing that is the right thing to do. And I've come to enjoy now stepping back a little more and watching my colleagues do that. And the level of trust that we have in each other is really quite nice to see. You have children and you watch your children grow up to be adults and you see their interactions. You get that smile on your face. And when you see your colleagues do the same thing with each other, you lean back and get that smile on your face.
And for those who don't know, maybe share a story on Alger. I think it's a fascinating story.
October 4th of this year, 2024, will be Alger's 60th anniversary. What it is probably, unfortunately and sadly and tragically known for is that Alger lost essentially its entire investment team in the attacks on the World Trade Center on September 11th. And I think 5 or 6 people survived because they just weren't in the office that day. And one of those folks is Dan Chong, who's our CEO, and Patrick Kelly, who is our large cap PM, who's still with us. Kevin Collins, who was an analyst and is now in our client portfolio management group, was there at the time. But the firm was tragically on the brink of not existing anymore. Large credit to Dan, who decided he was going to rebuild the firm, and an extremely large amount of credit to Dan, who said that he was going to rebuild the firm following the same investment process, philosophy, and style of fundamental research and growth equity investing. And the next couple of years for Dan and for Pat were rebuilding the investment team, calling on former Alger employees who would come back. There's a wonderful story of a person quitting their job on September 12th and saying, I have to go back and help Alger. And that individual worked with us for 15 or 16 years thereafter. There's a portfolio manager who's now since retired. Her name is Jill Greenwald. She came back and helped Dan rebuild the investment team. And so that in and of itself is the subject of many studies, in my view, about leadership, about organization, about continuity of process, philosophy, and style. So I think there's a ton that people should look at and try to understand in terms of business building what went on from September 12th, 2001 and forward. at our firm. It's stunning. I joined in 05 and we brought in a head of distribution in late 06, early 07. I forget exactly when. And I think Dan's mindset was I need to have people around me so I can focus on keeping this investment team producing great results and develop partnerships with people like myself, like our head of distribution, who were going to really rebuild Alger. It's been an amazing experience. I think what happened to the firm will never leave the consciousness of anyone connected to the firm. And I was not there, but I am reminded every day of what happened to the firm I've spent the last 19 years at, and really reminded of how important it is, not only to the people who worked there, but the people who died, unfortunately, on that day. It means a lot to a lot of people.
And what was the attraction to going to a firm like that at that moment in their re-evolution?
I had this really great conversation with Dan, and I thought, I can be impactful here. I immediately saw in that interview and in that time I spent with him what his needs and the firm's needs were. And I realized that was stuff I was good at. Bingo, that was the hit. That was the connection. What I didn't realize was how much I was going to learn over the next 19 years. I probably didn't focus on at that moment how much I would grow and develop and how much of an opportunity Alger was going to give me. And secondarily, of course, when you grow up as a lawyer in a regulated business or a compliance officer in a regulated business, your ability to impact the bottom line is just definitionally lower than someone in the sales organization, someone in the investment organization. I always wanted to help grow a business, sort of step out of the pure legal role and help think about how to make the firm bigger, better. And Dan offered me that opportunity in a way that other places that I was talking to at the time did not offer me. So you have that interpersonal moment with someone where you're like, yeah, I can see myself spending a lot of time working with them. And then the opportunity to expand my own experience base and be impactful in ways beyond just what I had been up to that point. It was risky for sure, but turned out to be great.
So going from legal compliance, you have to actually understand the business itself, but moving into the COO role is different. Any big takeaways making that move from a GC CCO seat to a COO seat?
Oh my gosh. Read everything you can get your hands on from anyone who gives it to you. Talk to as many people as you can about what they're doing. People in my family and some of my work colleagues might say I'm innately not the world's best listener. So I remind myself every day to do that and talk a little less, Hal, listen a little more. And I think my time as an enforcement lawyer did teach me how to ask questions. And one of the cultural rhythms that I enjoy at Alger is I watch the analysts ask questions and think about companies that they are performing research on. And I think about my time as a enforcement lawyer. You have to ask a lot of questions. You have to keep probing. When I was a lawyer, it was don't stop until you get the answer you want, which hopefully was the truth. But when you're in a private firm like Alger, go spend time with your vendors. Hey, what do you guys do for other clients? Tell me how. Show me. What are your systems? Why do your systems work the way they do? Why do your systems talk to each other in a certain way? What are your plans for the next 5 years about the technology that you're bringing to our organization? And then I can switch gears because that's like from 8 to 9 in my morning. I'm trying to figure out what everyone else is doing out there and whether Alger can do it. Then I start reading about what's another firm doing and what are their products. And today's topic is what does the ETF share class and an open-end mutual fund mean? And should we be doing that? Should we be first? Should we be third? Was there a first mover advantage? My mind starts working and then I start in with questions and where can we learn about this and who can teach us that? And how can we gain knowledge and how can we become expert in it before we even launch it? And then you start thinking about, okay, so what transactions are happening? There was a big M&A transaction between a European advisory firm and a U.S. firm this year. And why did they do that? What were they hoping to gain? Where was their market share coming from? And what were their investment results? When you're around people like the people I work with who are incredibly inquisitive and a little dogmatic about getting the answer that they want to get, you start to learn how to ask those questions. And then you're talking to your colleagues. I have some fantastic colleagues that I work with on the ops and admin side, and they drive me crazy just like I drive them crazy with, what about this? And what about that? And can we talk about this? And what about this issue? The switch was take the natural skills that you have and the skills that you develop, and then start to think about how to apply them to the areas of responsibility that you have. So now I spend a lot of time asking lots of questions and try to divide your world up into, I'm responsible for ops, admin, IT, finance, human resources, legal, and compliance as a day-to-day. I'm also responsible with Dan for knowing the industry. I'm also responsible with our head of distribution, Christoph Hoffman, for knowing, he knows sales, but he and I spend a lot of time talking about structures. How do we deliver the investment capability? And it's slightly different in Italy than it is in France. It's slightly different to a U.S. institution than it is to a U.S. retail investor than it is to an endowment and a foundation. To me, it makes it fun, but that's the transition. And then you just keep building on it.
And what does a day in the life look like for Hal today?
I've mentioned my wife. She's a television journalist and gets up quite early in the morning, which means I get up quite early in the morning. We're up early. I'm usually in the office by 6:30. I try to use that time to do as much reading as I can. As I mentioned, you really have to know what's going on. Everything from major national newspapers to industry rags to, I've spent a lot of time reading research reports on public competitors of ours. To the extent that's helpful, there are not a lot of public competitors in the investment management space relative to other spaces, but you try to do that kind of reading and learning. And then it's whatever the day brings. My mind on my drive in the morning starts to go to, there's 100 things, so start to organize your head around those 100 things. I've established formal meetings with each member of my team on a regular basis, and then the senior representatives of all the areas. We meet formally on a Monday morning. So Monday morning starts off with what's going on this week and what are you working on and how does it impact everybody else in the room? Lots of meetings, which leads to lots of later afternoons because all the stuff builds up during the day, whatever the issues may be. And then I start to use the later afternoon into the earlier evening to help folks solve those issues. I frankly tend to read a lot of stuff that people give me on the weekends because it's quieter now. Our kids are grown up and nobody's knocking on my door on Saturday at 8, 9 o'clock in the morning before my wife and I start whatever we're doing for the weekend.
Unpack the meeting piece. It's pervasive. You can't avoid it. What's your intention around how you create those meetings? And obviously for communication, but what's your philosophy on that?
I think that those meetings are like 80% about them and 20% about me. And what I mean by that is I think that the point of those meetings are you guys should spend your time organizing what you are working on. I use 3 phrases in my mind for people. There's stuff that comes up every day. Those are sort of day-to-day things. Then there are things that you do with regular frequency. I have to file this document. I have to create this report, et cetera, et cetera. And then I use this term longitudinal projects, things that you are trying to work on. At Alger right now, we are finishing up a transition from other service providers. We decided to globalize our mutual fund and administration and mutual fund accounting and middle office services with Bank of New York. So this has been a couple of years in the making for Alger to analyze who we were going to partner with and spend time getting to know the capabilities of each. I'm very happy with what's happening with Bank of New York, but the transition from our current systems to Bank of New York as custody and administrator, that's done. But now we're moving over to using their Eagle system for our middle office. That's a longitudinal project in my mind that takes months, multiple months, and touches everybody in the firm. Come talk to me every week about all the little things that come up from day to day. Come talk to me about all the regular things that happen because you work in an organization where regular things have to happen, be it monthly financial reports or schedule tech upgrades. That's what those meetings are for. You organize yourself. You come talk to me. I'd like to think I could give folks some insight onto matters they're working on. I'd like to think I could see where two cars might be going down the track and likely to bump into one another. So if person one says something and then the next morning person two says something else, I might say, okay, I see we're about to have a little train wreck here. Can we switch tracks on one or both of you? I'll let my colleagues decide if I'm successful. I'm very self-critical. I am always playing in my mind. Did I do a good job with that today? Did I reinforce what I wanted them to do? Do they get benefits from spending 30, 40 minutes with me?
And on those longitudinal projects, what's your philosophy on building consensus? Because you have a number of stakeholders, and a common challenge people have is that not everybody's going to be 100% on the same page. How do you make that one decision with picking that vendor, for example, and get everybody over the hump and say, look, not everybody's going to be 100% happy, but we have to make a decision?
Our head of fund administration will tell you, and if you gave him truth serum, that he and I have been talking about this for 10 years. So consensus takes a long time. I think the only way to build consensus is to involve as many people as you can. And there's a challenge there because what I tend to find is I want your input on how a project like this affects your area, whether it's the legal and compliance people coming in and saying, I want to learn all about the new applications that you guys are using or the new vendors you're using and what they can do for me. And I have to push back and say, that's all I want your input on, because then they'll start talking about some component of the technology that affects the marketing department. You have to make sure people don't drift away from their core competency. And at the same time, as I said, if you learn to listen, those people may have insights about something outside of their core competency that's very beneficial. So I'm not a really enormous fan of long meetings, but you have to have a lot of long meetings. You have to give everyone the opportunity to share. You have to then, every once in a while, make sure you direct people to the term we use at Alger, stay in your lane, right? You have to try to say, okay, try to stay in your lane. And you just meeting after meeting, iteration after iteration. And funny enough, at the end, we were down to like 2 or 3 vendors. And I just did it in a very old-fashioned way. I said, everyone take a piece of paper, no email. I don't want to be able to track this with the tech team. I'm going to be out of the office on Thursday afternoon from 3 to 5. Write which vendor you want, fold it up, and there's a little baseball cap on my desk. Just put it in. And it was unanimous. I was very happy because I didn't have to make that decision. The team made it together. It's inescapable that it takes a lot of time to be good at anything. On those big longitudinal issues, you have to iterate. You have to let people share their piece. For me, the interesting part was I kept pressing back on everybody with the following question. Are we buying something new, and are we going to still do the same old stuff and shiny new toys? So what's going to change, guys? How are we going to pick up efficiency here? How are we going to make our life easier? How are we going to reduce error rates? Can we eliminate 15 reports because there's some other way that this new capability is going to help us? We found a lot of that in this transition. So I also have to remind myself of my role. Nobody wants to hear on my views on whether application A is a better interface. I'm not going to use it. The people who are using it are going to use that application. It's a little bit of, I try very hard say it out loud to my colleagues. Sometimes when I'm being critical, I'm literally being critical of myself in front of you. It's helped me to say, I'm wrong, right? Or I misunderstood, or you know what? You're making a better point. So it's all of that kind of jostling back and forth. No one is a fan of long meetings in the world we live in today.
People struggle with this stuff all the time and making decisions, and then how much you own it versus how much you delegate. In the event that people felt those tickets and you had a 50-50 split, would you send the jury back?
What I'd like to think I would do is go back in and ask people why they're feeling a certain way and iterate some more. At the end of the day, ultimately, I get paid to make decisions. And more often than not, I'll find myself saying, we're at the point of really marginal utility talking about it. The decision needs to be made. I understand there's a split, and I'm going to be the person who makes that decision, and then I'm going to be the person responsible for that decision. That's more often than not the way ultimately the 50-50 ties end, is somebody has to make the call and someone has to own that. And those are the attributes and the burdens of the role that I sit in a lot of ways.
And maybe to take a step back, there's a lot going on in the fund industry, the ETF industry. I'd love your feedback on what's going on today in the industry itself.
I just met with the senior folks at the ICI, and I'm not particularly interested in getting into philosophy and politics and the like, but my approach has always been pragmatism. What problem are you trying to solve? And I must say, is to be a little critical, I think we are, as an industry, doing things not really to solve problems, but just to do things. So I think that's putting a lot of pressure on everybody. I think the stats are the number of proposed rules coming out of the SEC that affect our industry is greater now than it's ever been. I struggle through trying to understand what problem the industry is trying to solve. Look, I have to be mindful of that. We have to be respectful of the regulations. For anyone who's a big fan of the original Star Trek show, I always think of Mr. Spock playing that 3-level chess game, and the regulations now in the industry now are becoming a little bit of that 3-level chess game. The main thing from my vantage point, I think what I worry about is, because of all of this, the cost of operating an investment management business is going up. And I think you're seeing smaller firms suffer a bit as a result. We made an acquisition of another firm in January of 2024, a firm called Redwood Investments. We're absolutely thrilled to have them join us, and we think it's going to be a great partnership. And we did this in 2017 with a firm called Weatherby Capital as well. And you can just see at lower levels of firm-wide AUM, it's just increasingly more difficult for those firms to operate successfully and profitably because of the incremental burdens that the industry is placing on its constituents. And I do worry a little bit about that. This is not to take criticism of anybody, but I think the industry is better if it has broad representation. And I do worry that 10 years from now, we're going to wind up with 5 mega firms. And I think that's probably not a good thing long term. So I worry about that. One of the great things about Alger is, in both the acquisitions we've recently done, the simple premise was you have great investment process and philosophy. We have great distribution and administration. And we're not here to meddle with your investment process. We're here to let you spend more of your time doing what we think you're very good at. We'll take all those burdens off your plate, and we'll let you leverage all of those capabilities and hopefully get you to grow. The capital is 4 times the AUM size it was in 2017. And I think, as a pure business matter, when you're 4 times what you once were, you feel better about yourself every day. You tend to think longer term. The worries that creep into your mind about, am I going to make it? How can I afford to pay someone when my profits are so low, et cetera? They go away. My premise has always been, make it easier for those guys and gals to do what they do, which is to pick stocks. And it's really hard to pick stocks and be successful. I encourage my team every day, figure out a way to make it easier for them. Figure out a way for them not to worry about IRS diversification. So those are the things that I think are happening in the industry. What do they say other than that, Mrs. Lincoln? How was the play? It's challenging out there, more challenging than I think it's been in quite a while. This is not to say that you can't be successful in it. I just think you have to be a little more thoughtful about how you approach your business and the structure of your business. Look, it bleeds into what kind of contracts we sign. Can I save a few dollars by signing a longer term relationship because you're going to get better pricing in the longer term? You have a bunch of conversations with your colleagues. Are we going to use this vendor for 3 years? Are you comfortable partnering with them for 3 years or 5 years versus a year-to-year relationship? You can start to see how it bleeds into every decision you're making.
Going back to the merger, so there's a lot of activity going on in the space. Any advice for people who going through an acquisition? There's this concept of, on paper, everything's wonderful, but then when the people come together, reality happens. So anything you can do to make that successful?
I worked years ago with a fellow named Bill Priest. And Bill, to me, is a sort of a legend in the business. But Bill said to me once, he said, if you can draw the org chart after the acquisition and the people who matter the most to success have roles that they're happiest with, then you dramatically improve your chances of success in acquiring people-based businesses. We are a people-based business. I think the investment bankers of the world and the corporate development people out there will tell you that investment management acquisitions and integrations are particularly hard because they're so people-based. I think you have to spend a lot of time with your potential new partners before you decide to become partners and really understand who folks are and what drives them and how they think. That takes a lot of time, and everyone's very guarded, of course, when you're going through an acquisition or potential acquisition. I still go back to that premise of, I think you're important to our collective success. Can I carve a role for you that's going to make you feel happy and energized, as opposed to, I don't really care about what role you have. And I think those people can become very bad actors in integrations. I've seen that earlier in my career, with my CSAM days. It was rough. That's the first thing. I think the second thing is, I hate this term, but I'm going to use it. The value proposition has to be clear. If I take Weatherby and Redwood as examples, the value proposition was, you guys are great investors and you're being distracted by the burdens of running a business in an increasingly competitive environment. We're not going to alter your investment process. We're going to try to leverage that and free up your time to do more of that. I think if that value proposition is clear and constantly repeated along the way, that people start to feel very good about why they're becoming partners. The third thing I would say, because I've gone through this now, 6 or 7 times in my career, I tend to find that people become extremely emotional about things that aren't really critical. I famously remember, as a Credit Suisse, we were acquired Warburg Pincus Asset Management, and they were a great firm. But I was stunned to learn that everybody cared very deeply about what portfolio management system the combined organizations used. This is 1999 and 2000. So this is a little story that I can tell. I asked the head of HR to give me the employment agreements of every PM in the firm. And we were in one of those integration meetings, and I had a stack of employment agreements in front of me, and they started fussing and back and forth about which system was going to prevail. And I flipped through, and I sort of gestured to all these contracts in front of me. And I said, I've just read every employment agreement for every one of you, and not one of you saw fit to negotiate when you joined the firm that you started with a provision that said that you got to pick your portfolio accounting system and your portfolio trading system. So could we let the tech folks figure that out, and we'll all learn to adapt to what they think is best for all of us? After the meeting, the CEO came up to me and said, that was wonderful. I remember that to make a point. People get very sensitive about what was theirs in their prior life, and you have to spend a lot of time changing their world with them, not against them. And look, we're all ambitious people, and we want to get things done quickly, and we want to finish our projects. But I have learned over time that you have to be very sensitive about how you actually integrate the firms.
I want to turn to where you're going. You guys have made some expansion into Europe. Maybe talk a little bit about where you're going.
If you think about it strategically, Alger has been a firm that is focused on growth equities and fundamental research. We invest in a very particular way, looking for companies undergoing positive dynamic change. And when you have that deep a focus into a particular process and philosophy that you employ, and we have for 60 years, it creates a bit of a challenge to your business, because from time to time, that process and philosophy is out of favor. So how do you de-risk the risks that get created by that? Credit Dan with this. It was his musings of, if we're going to be that focused, we have to have a broader client base. Lots of firms in our industry, smaller firms grew to be large because they were firms that distributed to institutional investors, or they were firms that focused on retail investors. And I think to Dan's credit, Dan was very willing to keep a distribution channel active for Alger, understanding that diversifying the client base, not only by client type, but by geography, was going to de-risk Alger in a more macro kind of way. It becomes pretty intuitive after that, which is we should start distributing in Europe. We should start distributing in Asia. And one of the joys of Alger is if we should start distributing in Asia, everyone is going to start learning that. Our Chief Distribution Officer, Christoph Hoffman, had a role prior to us where he was based in London. He also was based in the States for a bunch of years. So he was a real great fit as we are now really energizing our efforts for European and Asian distribution. We've got full-time headcount in Europe now, and we've got full-time headcount in Singapore. And so that's been fun because now my colleagues, more than me, frankly, are becoming quite adept at understanding FCA rules, CSSF rules, and every Asian country rules about distributing Alger products. I think in the moment, they don't love that they have to do a 17-country survey of where our Asian salesperson can go. But I think in the next 3, 4, 5 years, they're probably going to really enjoy the experience that they've put into their brains that no one can ever take away from them. So it's been a lot of work setting up a UK company. And we've had a Luxembourg family of funds for quite a long time, but we've added products to that CCAB range, and we've added sales to that range. Brexit was unreal in terms of what does it mean for distributing a Luxembourg-based fund in the UK. I think the regulators have solved that largely, and the industry has adapted to that largely. It's been a blast.
How do you thread culture back when you're expanding?
It's a special person who can understand how to operate as a smaller satellite person to a small firm in the United States. How do you thread culture? I think you spend a lot of time interviewing people, meeting people, trying to figure out, are you really embedded in the local markets that you're in? Do you understand what we do? Do you have experience somehow in distributing growth equities to Japanese, Korean, Singaporean, Australian institutions? The only thing I can say is you really have to be very thoughtful about who you bring in. You have to make sure that the person has the level of passion that is required, because it's extra difficult in my mind to be one of 2, 3, 4 people in an office and everybody else is back in New York. But I think we have found some really great people. One of our colleagues is coming from London to New York, and I'm meeting him at 7:15 in the morning because he wanted to catch up. And if you want to be a jerk, you can say to him, I can't meet you at 7:15. I can meet you at 9:30, right? If you want to be a jerk, you make him or her be on the call you set the meetings for 3:30 in the afternoon New York time so that they're exhausted at 10 o'clock at night. Sometimes you get up a little early. Sometimes you put them to the top of the priority list. And I think that means a lot to people, particularly when you're that remote. I'm getting in very early in the morning, so I see the flurry of emails from Asia now. We get this NDA out. So you walk over to your colleague and say, try to get back to him or her first thing in the morning. You know they're up at 9, 10 o'clock at night. They signed on for that, but you also know that they have 2 kids and they're finishing up dinner. And if you can get back to them so that they can close their eyes, their time, and not be stressed about, is someone in New York going to solve my problem by the time I wake up in the morning? I think the more you do that, that goes a long way.
And do you think that's changed? So the thesis of being empathetic in today's investment management world?
Oh, gosh, I think we're more empathetic now than we've ever been. I started in this business quite a long time ago, but I think there was much less patience for many things when I first came up into the investment management space. The idea that you would take a day flight to Europe when I was at Credit Suisse was a weird sign of weakness. The sign of strength was, I'm taking the overnight, I'm working a full day on Monday, and I'll be in the office first thing Tuesday morning, and I'm going to show up in a rumpled suit, exhausted, and you can't function well on 2 hours of sleep curled up. You show up in the office in London or the office in Switzerland or the office in Frankfurt, and you just work the whole day. So I think we've been a little more empathetic in that respect. Good part of this is you're starting to take a broader set of viewpoints in. Technology's been a great friend to everyone in business, right? I can shoot you an email. I can pop on a Zoom call with you. I can send you a Teams message. And so the ability to communicate may be a little less formal in this respect for the good. So I think that allows for deeper communication and better communication. They gave us these devices to use them. We should probably figure out how to use them as well as we can.
Hal, this is great stuff. I'd love to turn to a few closing questions. And my first question is, what advice would you give to an emerging manager in this space?
You have to have almost unwavering faith that you're going to be successful when you're just starting in this business. You can't let doubt creep into your mind. And it's really hard now. You have to produce great investment results. The cost of the business is going up. And again, that's probably a 5-hour conversation for another time about why data costs more money when technology is getting cheaper and cheaper. And it's the same data. You have to just have unwavering faith that what you are out to do is really going to be great. I also think you have to have some patience. We live in a world of immediacy now in so many ways, and it just doesn't happen overnight in the investment business. I worked with a fellow at Alger, and he was an analyst at a hedge fund, and then he briefly ran his own hedge fund. And the advice he gives to young people is, do not spend this year's bonus. Spend the bonus you earned 3 years ago and put this year's bonus away for 3 years from now. As you're starting out, you have to think really long and hard about how you're going to make it through those first couple of years. I heard once when I was a younger person that even the best bum has to work hard at being a bum. It takes an incredible amount of hard work to be successful in any venture. So perseverance, good planning up front, and a ton of hard work probably are the three things I focus on if I were starting up as an emerging manager right now.
And then the other question I have is, what one piece of, it could be a book, newsletter, article, anything you normally send to people?
I don't think I'm a big send books to people kind of person. I think I'm a share as much knowledge as you possibly have with as many people and try to get back as much knowledge as you can from the people that you talk to all the time. Don't waste your time with people who are going to give you information, knowledge, and experience. Be prepared to talk about something that's going to help you grow. I think there's a lot to be gained from understanding all the different concepts and practices and decisions folks have made over time. But I think you can learn so much from the people you work with, the people in the industry. If you're young and you get sent to one of these conferences, I think before we started, we were talking about what conferences looked like 25 years ago. Go to every single session with a notepad in your hand and listen to what the speaker has to say, and then reflect on whether you agree with that, whether that made sense to you. Come back and say, okay, I learned something here. And I think that's the best part of it. And you just got to spend a lot of time doing it. You can't learn quick. You got to learn over a really long period of time.
Good stuff. Hal, this was a wonderful conversation. I appreciate the time.
Thanks so much. I really enjoyed this, and I look forward to talking to you again.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.